Welcome back to the Demo Day podcast. I'm Jackson Fordyce.
I'm Josiah Simons.
We are here with Rachel Holt, the co-founder and general partner of Construct Capital. Rachel, thank you so much for being on the show. Do you want to give yourself a quick intro and talk about Construct for a second?
Yeah, absolutely. First of all, thanks for having me. Thanks for coming out to DC. So Rachel, co-founder, along with Dana Grayson of Construct Capital. We're nearly 5 years old as a firm, had been around since the very beginning of 2020, pre-pandemic 2020, as we like to tell everyone, because that was certainly a tale of two halves. We are all focused here at Construct on what we define as foundational industries. And so we think of this as the half the GDP that includes things like supply chain, manufacturing, logistics, mobility, the real world, as some like to put it, that really have not been innovated on or invested in deeply in decades, and really have missed the last couple of generations of the latest technology, even things like not even just Gen AI and all sort of the future-looking technologies, but even mobile and collecting data and really just like basic ML and all of the things that we now I think take for granted in almost all aspects of our life, but really have been missing from these areas, because largely kind of from 2000 and on, these areas just were not innovated in when it comes to technology. And we can talk about for a long time about why, but we really see this kind of like once in a, kind of generation opportunity, not just to think about what the new technologies are that are coming into these spaces, but literally 25 years of tech that's been missing from half the GDP is like an enormous opportunity, and one in which, particularly at the early stages, we don't think anyone is kind of totally focused on. Yeah,
and we're going to get into a lot of those industries here in a second, but before we get into that, it's the day before the election. We're not going to ask about specifics, but I'm just curious, in DC, the day before the election, what's the general vibe of the city like? Because you've been in DC for a while now, right?
I have, yeah. So I moved. I'm a born and raised New Yorker, which is just something you can't knock from anyone who was born and raised in Manhattan, and then was out in the Bay Area, and then came to DC in mid 2011. So have been here now for 13 years, but frankly have not been focused at all on the political side. So try to stay as far away from kind of the nitty gritty of DC, but certainly, it's definitely everyone's watching it, everyone's focused on it. I don't think anyone actually has like a total sense of what's going to happen, and hopefully, just as someone who lives here, the chaos does not ensue, because that wouldn't be fun for anyone to see out their window.
So back to what you were talking about with Construct and what you guys are doing. I want to read a quote from your website, and it's totally the point that you were making. So on your website, it says, the foundational industries of our American economy have been neglected, sacrificed, and nearly forgotten for decades. So I wanted to ask, what does that mean exactly, and why do you think that happened?
Yeah, I think if you look back and you kind of, without getting into a full history lesson here, if you look back, these, just thinking about industrials sort of as a proxy here, they were really tracking almost exactly with the total American economy up until like the mid 90s. And basically, the first wave of technology, the computerization and wave one of robotics all happened in within these spaces. But then kind of as the dot-com boom and then bust happened, really I think as a country we chose and decided that what we were going to focus on was comparative advantage, and we were going to go and outsource tons of these industries, right, kind of core manufacturing, and then these other ancillary business areas, supply chain, they all come right from that, right? And so we chose to outsource that. And then largely we're focused on kind of these huge, maybe more like vanity type projects, but the vast majority of things that really ended up being being the core elements of manufacturing were overseas. And so I think then what that meant is we now have tried to innovate and think about what we need to do to to not just like win back those areas, but really think about kind of what does the next wave of innovation look like. The beauty, I think, that we see is that actually the things that we are really good at as an economy, like Gen AI, like advanced technologies, are now starting to become the core pieces, right? It used to be about like how efficiently could you put widgets in a row. Like we've never been great at that as an economy. What we are really good at is these next gen technologies. And so those are the things that we feel like are going to kind of win over the next, in the next generation. And so we're pretty excited about the opportunity, I think, that we have, over the next decade, 2 decades. And it's why we think the next set of amazing technology companies are going to be in these sectors.
Do you think our increasing dependence on trade with other nations worry you?
Look, I think ultimately we have more options, right? It's not just about how bad the trade deficit is. Like I think we can certainly read and understand that it's not great. We're not in a great spot from that perspective. But I think for us at Construct, it's really about saying like how, when you actually look at the companies that are tech first companies in these spaces, and Uber, where I spent almost a decade, is one of the best examples here. They are growing faster than SaaS companies. They're going faster than the big tech companies right now, right? And that is because we see that when you combine these huge market sizes that have not had a lot of innovation with this technological innovation, what you get are, what we really believe are going to be like the next generation of most valuable companies. Yeah. And if you can project that out and say, okay, what does that mean in terms of the opportunity, economic opportunity we're going to have? It's enormous. And so I think some firms who we love and co-invest with, see this as being kind of about, American excellence only. I think for us, look, having a strong economy is great for all of us. Like that might be a really great byproduct of the strategy we're taking. But I think for us, we fundamentally see an amazing economic opportunity, and one that we're excited to have founders that we think are going to be on the forefront of.
Yeah, I think I was reading about a startup. I can't remember the name. It's Timber something. It's
Timber-I, yeah.
And it's the industry. I was reading is like $600 billion of like the forestry industry. Is that kind of what you're getting at, of like industries that haven't been innovated or like unsexy, but they just have incredible growth because they get some sort of innovation going and they just take off?
Yeah, that's exactly right. I mean, I think, look, I think when I was, back in 2011, when I joined Uber, everyone told me not to join a taxi company. Their words, not mine. I still need the legal disclaimers. Sure. Because transportation was slow moving and heavily regulated and high CapEx, and you were never going to get a breakout in that, a venture scale breakout in those space. And obviously, I think the book has been written, many books have been written, but on kind of that not being the case. And what I think, Uber and these other kind of tech first companies have demonstrated is, again, when you combine this, when you combine these massive industries, when you combine the opportunity size and frankly the lack of innovation, you're talking about still having like horizontal platform level shifts, not just kind of vertical slices of innovation that you can get in areas of SaaS. And I think, for us, that opportunity is just enormous. And again, for the same reason that I was, drawn to Uber in 2011, like you're actually changing how people live. You're changing people's lives, and you're just the scale of the kinds of companies that can be built here, I think, are enormous. They're transformative, and they're transformative across a whole host of different areas.
It feels like in 2024. For Americans especially, like even just going to the grocery store right now, it's so expensive. Every good and service seems like it's just increasing in like its price. And so I'm wondering, just for the average American, we're all wondering how and when are prices going to go down? What do you think, investing in these kind of startups, do you think that over the long term that trend will reverse if we kind of bring industrials back to America and have that sort of American first attitude? Is that like the long-term goal of Construct?
I mean, look, I think look, I think there can be like amazing sort of byproducts for the U.S. for all sorts of, in all sorts of ways from getting technology right in these sectors. But fundamentally, you just look at manufacturing. They're going to be, we're going to have a 5 million job deficit if you project it out by 2030. Like, this is no longer like a nice to have and optional, if you think about what software, automation, and that doesn't, robotics might be one area, but there's all sorts of different ways to add automation in to these areas. I mean, it's going to become a necessity. And I think companies are starting to realize like this, it's not a nice to have to start adopting some of these technologies. They're going to need to do it because it's going to become like virtually existential for their survival.
Yeah. You mentioned that you love founders that don't take the easy road. I'm curious, what is the easy road and how do founders avoid taking the easy road? Yeah,
I mean, I think the tough news is it is super tough to be a founder. I mean, it is. I have so much respect for anyone who does it. It is, it's truly, I think, like the hardest job.
You're a co-founder in Construct.
Yeah, we've got a little bit of it, but when you're really starting to kind of build a brand new company from the ground up, like it is super challenging, right? And the ebbs and flows and the number of people who are going to say you're crazy and the number of no's you're going to get is just brutal. But having conviction in your idea, I think is so important. And then I think like the sort of not taking the easy road, I think, when you have this kind of technology meets the real world, you have the technology problems that the technology founders have, and then you have the real world problems as well. And I think, you have both of those things happening at once. And I think, again, I think back to Uber, we had all the technology challenges. We had dispatch, we had marketplace, we had, all of the consumer app things, currencies, everything you'd have. And then you also had I was running the US and Canada business. We had 212 different regulatory regimes at different points, right, that we were dealing with. And so that's kind of like that combo. And personally, it has those regulatory regimes and everything like that exist because you're like really having an impact on people's lives, and there's a real reason that safety matters, and those and the regulations and everything else are there for the right reasons. But it certainly makes for a different kind of company that you have to build to contend with that kind of thing.
What's a clear sign that a founder is taking the easy road, though?
I mean, it's hard to say, and that any road is that easy. So maybe it's a good flag to change that that quote a little bit. I mean, I think when I think what I was getting at with the easy road is there are pure software businesses that everything about what they do operates fully in a virtual world, right? And I think again, when you kind of when you actually start marrying those technology challenges with the real world challenges, I think that's when things get fun. And I think at Construct, we probably have more operationally complex businesses or businesses that have some kind of hardware focus than the average VC. And I think, that's because I think we see opportunity in those spaces that require that in a way that maybe there are definitely some firms that won't touch those kind of businesses.
Yeah.
You mentioned Uber, and I definitely want to get into your time at Uber. You were one of the first 30 employees. You were for a long time part of the executive leadership team. And so as a venture capitalist now, on the other side, when you hear, because I think we hear it a lot in pitches, founders will say, we are the Uber, but for blank. Yeah. When you hear that, do you kind of cringe being part of Uber?
If they don't know her background too.
Yeah, exactly.
No, well, I often cringe mostly because I think some of those are very misused, right? Mm-hmm. It's all it means is that something happens fast, or all it means is that there's a marketplace involved.
Yeah.
And probably, there are a few businesses that are really good corollaries to what Uber did, but usually when I think of that, I think about much more like disruption of a massive space, kind of, and from a first principles perspective, ripping and replacing the existing, kind of an existing construction of how that industry needs to work, rather than just kind of like adding little pieces to it. And for me, like, that's what I think about, but I think many businesses will have like little components of it. You hear more about like, the stripe of and stuff now, because I think when you use the this of, you're just thinking about like the latest thing, the latest hot thing. Exactly.
And does that, like, so if you hear that and then you hear we're the Uber but for whatever, but then you realize, no, you're really just talking about something small in the company, you're not talking about an actual disruption, does that kind of turn you off to the founder to say they don't have a full grasp on what it would really mean to be the Uber for this thing, and therefore I'm not sure I can invest in a founder that doesn't quite get it?
Yeah, I mean, usually I'm not evaluating like how well the founder understands Uber. Usually it's about how well they're understanding, right, like their existing business. So I think of what you said, probably what would raise more red flags is like, are they not thinking big? Are they not thinking about kind of the best founders are always thinking about what's possible and what's next, and thinking, in addition to being able to ship a product today, they're able to think 5 years down the line. And I think like that's probably the biggest red flag in what you said. But I will say the Uber of is always not my favorite analogy.
Is there ever too big of a dream that a founder can have? Or do you ever try to bring them back down to earth? Or do you want them to have a massive goal of like exploration of like a different planet or something like that? Do you want them to dream big?
Look, I think the best founders are always going to be dreaming big. But the best founders can marry that ability to think ahead 5, 10, 20 years, imagine what the future can look like, with kind of their stamp on it. But at the same time, like getting from 0 to 1 to 10 to 100, right, is about like shipping a bug-free product today, right? And it's about being able to do all of the complex things that, but the small things, the small iterative things that actually make a company successful before you go to the moon. And I think the best founders can do both, because being able to raise money, to hire a team, to just be the kind of person that that attracts other people to work for your vision, like you got to be able to sell that vision. You got to be able to think big. And so, I think, but you really need both. And it's, it might be easy as like in an investment team meeting or something like that to sit and say, oh, we could pair this founder with someone else who's got this. But the reality is, I think if you look at the best founders, they can do both.
Going back to disruption, how did your time at Uber and learning how to, or not even learning, but actually disrupting this industry of transportation, how has that helped you encourage founders to disrupt their industries that they're going into?
Yeah, I mean, I think one of the things, particularly in sort of the first, let's call it like 5 years of my time at Uber, we were constantly thinking about on a day-to-day basis. It was like everything was possible. It was just a question of like how we were going to approach it. So we really like coming and saying, hey, there's no solution to this was like not at all an acceptable, way to kind of share an update, right? It's like, hey, here are our options. These are the ones that I think have a chance. These are the ones that are going to be far-fetched. But like, look at what the payout can look like if we can get those right. And so, and I think the other piece where Uber was really unique is we just had like a very, very disciplined, intense experimentation culture. And I think, one of the big misnomers about Uber was everyone saw like a really high burn rate and assumed like things were crazy there and out of control and everything else. I think in reality, there were the vast majority of like the spend that was going on at Uber was incentive spend that could be actually pulled back on like a week by week basis. Right. And it was all backed up with like very large sort of data science based models. And so, sure, there were things where there were obviously experiments that don't fit into that paradigm, but a lot of what we were doing, particularly in the US and Canada, which was the most, the largest and most established region, was, very, very sort of scientifically driven in terms of that spend. And yes, the numbers were big for sure, but it wasn't done actually in sort of this like money falling from the trees way that I think maybe the outside world perceived that. Sure.
Yeah, I want to speak to that sort of the experiment of Uber and how we didn't see Uber become profitable until last year was the first time I think in its history. And there's a lot of doubters who said that would never even happen. As an Uber insider, like when you worked there, were you ever kind of two minds? Like, yeah, I hope we get profitable, but I don't know if it's possible. Or were you always, no, we're going to be profitable someday?
Look, I think the biggest thing that, again, is maybe people didn't understand is like we were making money on every ride, right? So like from the very beginning, it wasn't that there was no business model, which I think is like something people throw around. Oh, like there's no business model there. It's like, no, there was a business model. There was a meaningful take rate that would happen on every single ride. And at the beginning it was 20%. And then there was, it would move and float around depending on kind of the different structures and models. But that was actually, there was a very clear business model. And so, and I think if you actually not going to get deeply into Uber, but if you isolate mobility and then you isolate Eats and Freight and ATG and all of the different experiments, the business actually looked quite sound quite a bit earlier in that. And I think the biggest thing was, look, Uber went from being in 2 cities, 3, I guess they had just launched a 3rd city when I got my offer. It was actually no, that's not true. I should say the day I got my offer, they had launched their 4th market, which was Chicago. And it literally went from there to being global. I mean, I literally just got back from Brazil last week, and I probably took 25 Ubers around Rio. Like there would have been no way for me to get around Rio if Uber hadn't existed, and has just become has become a verb, has become a global company, but a global company that operates like not just in major cities around the world, but in like secondary and tertiary cities. And that takes investment, right? And not just investment from a technology standpoint, but in many cases, you're opening a small market that has its own currency, that has its own legal framework, that has its own team. And so if you're going to build in sort of that fast a way around the globe, in something that is not just about bringing a software to that place, but bringing a software that touches people and that touches literally like the ground in these places, it's going to take investment. And I think, that investment is now paying off, meaningfully, and credit to certainly everyone and all of my friends and colleagues that are still there and doing that, for sure.
We're in the media world, and so I'm curious, in your opinion, how do you think the media world will get disrupted, or if it is already being disrupted with startups like Runway and other AI-first media companies? Or I guess Runway would call themselves a media and entertainment company, not an AI company.
Yeah, it's interesting. So we don't focus as much on the media side at Construct. So I spent a little less time thinking and focused on kind of where disruption is going to come there. But I think fundamentally, like the same principles around, thinking about sort of where control has sat. I mean, I think it's already happening with media, right? It's like, I mean, if you think about just how much more dispersed kind of the journalism is, right, than it used to be. It's probably, I think in some ways, one of the spaces that's had like as much disruption as anywhere. Now there's going to be waves of that, right? And so, folks that are focused on investing there probably have a better perspective on where the latest wave is going to be. But I think you've seen if you think about how many places we get information from today versus what we what it used to look like. I mean, it has totally changed over the last 15 years.
Definitely.
Do you think that Uber will kind of continue and sustain that profitability from here on out, or do you think that it will continue to kind of teeter back and forth in terms of profitability?
I mean, look, I'm not at Uber anymore, so I'm certainly not going to make any predictions about what they're going to do on a go-forward basis.
Well,
but
you're allowed to make predictions now. You
I
weren't before.
I can just make predictions about everything.
Sure, I guess they will. Why not?
Yeah, exactly. I try not to make them about public companies I used to work for. But no, but generally, I think like Uber understands exactly what the core levers are in the business, right? So making decisions, as do, I think, like all the best companies, right? And so, it is definitely, it's a different world being in a company that is has to think about those levers on a quarter by quarter basis. Frankly, it's like why I love investing in startups and private companies, right? Yeah. And that's because you can actually take the long-term approach, right? You can take the approach not just of what matters quarter on quarter, but what matters year on year, and ultimately like decade on decade, right? Which is so cool. I mean, one of the best things is after a startup goes through a funding round. Even companies that go through their B or C round, it still has this feeling of, okay, we've got the runway now. Right now, like, let's really think about where we want to take the company over the next 2-3+ years. You don't need to think just about what did we do last quarter, what are we going to do next quarter. And the entire point of venture, the entire point of private markets, right, is to be able to think longer term, is to be able to build these big companies. And I think it's one of the reasons that, like, I think it's harder to understand as a venture, or as kind of a venture person focused on these spaces, sort of why everyone suddenly was focused on crypto as an example, where suddenly, look, is it attractive to have an asset class that you can get a return very, very quickly to your fund? Of course. But like, really, that's not the point of venture, right? The point of venture is to be thinking 5 to 10 years down the line. The point of venture is to be thinking about these category changing and defining companies. And I think, it's why, like, I love the early stage. When I joined Uber, it was like between their series A and B. Like, I love that phase where, like, it's really about 5% differences and tweaks from a strategic perspective can have 180 differences in terms of the impact of what company eventually gets built. And I think it's why your earliest investors in many cases are the ones I think founders are closest to, because they were there when they were making those, again, seemingly small decisions, but decisions that ended up being totally defining in terms of the companies that they built.
So every early stage company wants to be the next Uber. I know it's hard to play favorites, but for the portfolio companies here at Construct, do you have one or maybe two that you'd say this could be the next Uber in their own category? And if you do, would you mind telling us about them?
I mean, we've invested in almost 40 companies at Construct, so we have 40 companies that are doing
That's right.
that,
That's the right answer.
for sure. But look, I think, VHO is a good example of a company which is probably one of the furthest ahead just in terms of our portfolio, in terms of their revenue journey, in terms of their customer sophistication. What VHO is doing is they're completely transforming the package delivery market. Mm-hmm. So, typically this is a space, obviously, that has been dominated by folks like UPS, FedEx, DHL, not the tech first players that we like to invest in. VHO is that tech first player. They are building a package delivery company with a technology layer that completely underpins it. Sometimes they'll describe themselves as Amazon Prime for everyone else. But fundamentally what they're doing is a combination of using a gig workforce to do the delivery that comes from the warehouse to the customer. But more than that, because they have such strong technology, their on-time delivery rates are way better than the industry average. All of their customer metrics are better. And fundamentally, what it means is that when customers are getting something delivered by VHO, they are ordering more from that brand. And so brands are super attracted to using VHO because it's a lot better for them, not just in terms of the cost savings or anything like that, but fundamentally in terms of their ability to grow revenue. So they are now kind of into the hundreds of millions of revenue range, well into the hundreds of millions of revenue. And we're really excited about the progress that they've made in a really short period of time.
If you can think back to when you first met the founders there, was there ever a point where you gave one unique insight to them that you had learned at your time at Uber that was very applicable to what they were building?
You know, it's interesting because of the parallels in the business model. They've got the gig, the gig parallels. Sure. In addition, so I spent most of my time at Uber on the running the U.S. and Canada business. I spent the last couple of years building all of the new mobility businesses. So at the time, I was overseeing the businesses that ran the Jump e-bike business, e-scooter business, as well as an incubator, and the e-bike and e-scooter businesses had some of the warehouse components that you see in a business like Veho. The gig worker, and they actually had real assets that needed to move around. The core rides business, obviously, very reliant on a very similar worker between the two, the kind of 1099 gig model, and so there's been, I think. You should talk to the founder. I don't like to put words in anyone's mouth, but I think there's been so many parallels between those businesses, just from I think how you attract drivers in that space. I think they've done a really good job. There have been a bunch of the kind of earlier Uber mistakes that they have not made in terms of really making the job like extremely driver centric.
What's one of those mistakes maybe that you shared with them to say, hey, avoid this?
Yeah, I mean, I think one of the challenges we had at Uber, kind of if I rewind back to 2012, 2013, and kind of up and through maybe 2016, their first, I think, everyone at Uber was a rider, right? Everyone was using the product all the time, but we actually weren't even allowed to drive. And that had to do with all the IC stuff and everything else. But what that meant is that we very much understood the rider experience, not just from the analytics, but from the deep personal experience. Versus kind of the driver experience. And it really wasn't until 2016, I think, that changed, and we were suddenly able to drive. And I think one of the things that Veho's done an incredibly good job of is, they are out there, the team is out there doing package deliveries, on a regular cadence. Like I've done almost as many package deliveries with Veho, not, as an investor, as at least I had done through, maybe 2017 or so in terms of rides given as an Uber driver. Wow. And I think that really speaks to kind of the values that have been driven in kind of from the very early days. Then Uber went through a big reckoning around how to transition and change their relationship with drivers. But I think just they've done a very good job of ingraining that and kind of a customer brand first ethos kind of from the very beginning. In a way, I think that's why the product experience is as strong as it is.
So what's next with Construct? Into the next year, the next couple of years, what are y'all working on? What are y'all excited about to announce, or what are y'all working on?
Yeah, absolutely. So look, first and foremost, like what we work on doesn't matter. It's the great stuff our founders are working on that actually matters. So we don't. The hard work is not done by us. The hard work is done by our founders. So I think we've got a whole bunch of companies that are really kind of starting to break out. I was just as I mentioned, I was in Brazil last week. A company down there called Vamo, which is electrifying the moped market down there, the two-wheeler market as they call it. And what they do is they now have a product that is rented they rent on a weekly basis to moto boys their term, not mine, but these are drivers that are doing deliveries for iFood and 99 and kind of all of the typical Rappi and others kind of down there. And so what this is, they have basically built a battery swapping network that enables, finally, mopeds down there to be electric, not just combustion. And so there's tremendous savings that can come from doing this. There's obviously the environmental impact, but the company is doing just really, really well. And it's amazing to see kind of the impact of just the financial impact of like what they are able to deliver from a business perspective versus what typically looks like, while also saving a tremendous amount of money on a weekly basis from these delivery drivers down there who are living literally week to week. Yep. So sorry about that. Really, really meaningful impacts down there. In particular.
How did you guys get connected with founders in Brazil?
Yeah, that was an interesting one where there was a lot of similarities to what we were building at Uber on the Jump side, and so actually the team that had built out their battery kiosk was a team that was working on a battery kiosk for Jump while I was there. So really got connected to them through. Kind of as they were starting to put together the business plan down there, and it made a lot of sense for us to be involved. And then we co-invested with Monashis, which is a great firm locally. So they definitely bring the local experience, but the mobility experience is certainly something we have a lot of experience with here.
Rachel, we really appreciate you taking the time to be on the podcast today. Thanks for joining the show.
Thank you.